Our stock market guru, Doug Flynn, is standing by. First up this hour, the certified financial planner, co-founder at Flynn Zito Capital Management, where he actually has guru written on his desk, I believe, for his office wall. So we said, all right, Doug actually made us hats months ago. He says we're going to get to 40,000 on the Dow, and now we're all disappointed we're sitting here and we're not there. But no, another good day, right? And we're going to get there, that round number. I don't know what it means, but you can tell us.
Yeah, I mean, that last 0.5% differential is no different than any other 0.5%. But obviously, it seems meaningful because it's a milestone that has never been crossed in the 100 plus years of the Dow Jones Industrial Average. But, you know, there's a lot of good news. And typically, when you have all-time highs, it's followed by additional all-time highs. That trend continues for a while. So that seems to be what we have, on our backs right now. But, you know, there's good news and there's bad news in everything. And right now it's a lot of good news, but there is some bad news lurking.
All right, let's talk about that in a moment. But the good first, let's look at a chart of the Dow over the past year or so. And that's what you and I have been talking about on this show, is the performance at the latter end of that and this run up in the market. So it's interesting now to get to this point, about 40,000, and we pretty much know that interest rates are going to stop or start coming down, right? We were talking about this yesterday at some point this year. We know a lot of people have money kind of parked in cash or cash equivalents, as they're called, money market accounts, and they're starting to put it back into stocks. So maybe this thing keeps going for a while. What do you think?
Yes, I mean, you have to look. I mean, the S&P is up 11%. The Dow is up 6% year to date. But if you use the S&P as a guide, most people's 401ks are in that. That's the long-term historical average of the market on an annualized basis. And you already have that essentially in the first 3 months. So the big concern is, you know, the money that might be chasing the market at the all-time high under the fear of missing out is what happens. I would just say this, you know, if this is money you don't need for 10 or 20 years, it's 401k money, then that's fine to be adding at the highs. But if you're putting cash that's been sitting there to work and you might need that in 1 to 2 years,
right,
I would be really, really careful, and I probably would not put that in the market right now. You don't want to chase all-time highs with money you might need in the very short term. That's a mistake. People tend to make that over again, and they pay the price because nothing goes straight up forever. There's going to be some corrections.
Yeah, want to buy low, sell high, not the opposite. That's the whole idea behind this, if you want to keep it simple. Now, technology. We talk a lot about technology driving this rally. Another technology company today going public and trading for the first time in Reddit. Ironic, I suppose, because I think that's where they used to talk about all those quote-unquote meme stocks on Reddit. Right. I watched a movie about that. But there's the IPO price. You know, the top of the indicated range. What does this Reddit IPO, if anything, tell us about the broader picture?
Well, we haven't had any deals like this in the social media space in a couple of years, so it's interesting to see when one comes out. Also, there hasn't been a ton of IPOs that have made a lot of headlines of late, so you interestingly want to see when they price them, does it pop out the gate? Does it kind of settle in right where it came out at? This one came up a little bit, as it tends to do, then it settles off a little bit. So I think some good signs that the market is a good time to maybe come out with some IPOs. I don't know how many more are in the pipeline per se. There's not a ton of publicly traded stocks compared to the amount of private companies out there. But you have to be very careful with chasing IPOs. And only a select few people get in on that inside price. If you want to buy it in the open market, which you can do now, many IPOs, Facebook, and you can name a ton of them, actually at some point after the hoopla settles down, they trade below what they came out at for a little bit of time. And then if they're a good company, it resumes. So be really careful chasing an IPO because it's the hot thing of the day.
No, I'll have to talk to you about getting in on the Truth Social IPO if it ever happens, but that's a totally different story. Let me ask you about housing, because you and I were speaking about interest rates yesterday, and we speak about it every day. That's another one for just regular people out there that watch this run up in the market. They know rates are going to change. What's next for the housing market, would you say, Doug?
Well, actually, existing home sales jumped. They just came out with some information about that, the latest gain, and that surprised a lot of people, even with prices being up. And so, okay, that's existing home sales. What I like to look at is a little bit deeper in there and say, you know, what about price? What about 30-year mortgage rates, and how does that with the median sales price of the actual sales that happen? That's also up, and it's up a good amount. So actually things are looking pretty good. You know, you think the prices are so high and rates are so high that it's been a tough market, but with the lowering of interest rates and rates coming down a little bit, People are starting to catch up with the affordability, and they're building homes now more than they had. So things look, I think, better for the housing market in the next 6 to 12 months than they have of late. For people, especially that are trying to get in their first home, that's the toughest part.
Fair enough. Give us a quick thought, Doug, on this Apple story being sued by the Department of Justice and how big a deal you think that is. AG was out talking about it earlier today. They say it's a monopoly.
You know, there's some positives about this administration. One of the negatives about this administration is it's probably the most litigious one that has ever been. I don't think there's a deal that they like. I don't think there's a company that they really like. They like to go after the biggest companies. That gets press, that gets their base hopped up, you know, people, monopolies and all that kind of stuff. Look, any company is going to try to fend off competition. I think a lot of this happens when you're building something. You build some things to try to create a moat around you. And maybe when you get big enough, that is still in place. And some of that needs to get broken down, like on the App Store and the ability to use apps on a different way. But this is really wide ranging what they're going after. And the thing that really got me, I think the quote was astronomical valuation. Who are they to say what's an astronomical valuation of a company? And by the way, Apple's not the top company anymore, but they just throw around these arbitrary words as if they are the arbiter of what's astronomical in terms of value of a company. But when you're in the crosshairs of one of the biggest companies, you have to know the government's coming for you in some way.
That's what Microsoft did, found out in the 90s and all the rest of it. Doug, thank you very much for all of that. We'll see if we get 40,000 here in the next few sessions, but we want to talk.